Alright, what's up guys? Welcome to the live session. Today is October 28th, 2020, and we're back at it again. So this morning, the dollar index is possessed. Actually, not even from this morning, from a London session, and we'll go into why. So we started off the week. Today is the 28th. We started off on the 26th, bullish on the dollar. We are bullish for the dollar to start off the week. But the dollar index has to clear last week's high of 93.13. This was on October 26th, on Monday, right? And we talked about the descending channel and how we were on the upward leg. Okay, actually, YouTube's taking a few seconds to load, so I'll let YouTube load before I dive into this. But man, we have a very important lesson today. It's also going to be important for me as well. Alright, so YouTube's up. So, we started the week off bullish for the dollar. We spoke about it on the 26th of October. We are bullish for the dollar to start off the week, but the dollar index needs to clear last week's high of 93.13. And so this is the descending channel we talked about. And to start the week, we were pulling back, looking to make a new leg up because a descending channel, right? You have your first, second, and then we look for a third touch at the top of the channel. So to start the week, the dollar index had different plans. It actually sold off from 93.13, and that's why we took the USD CAD short. Then come London, this thing became possessed. Literally. So if we look at it on the smaller time frame, this is at roughly the time stance for dollar index is a bit weird, but this was during I think 2 a.m. 3 a.m. where we broke above 93.13, but it was a doji candle where we had an indecision equal wick top and bottom. And if you look on the 1 hour, this was a nice kind of fake rally to the top side before price sells off. So when I saw this, I was pretty confident that the price would come back down. This is just a fake up to the top side. This has been a pretty decent hourly resistance, and then all of a sudden, price just surged. I mean, look, if you just look at candle by candle, you'll see that price just climbed, all through from London to the start of New York, and just surged, completely blasted off. Now I woke up scratching my head, thinking, what was the move? There was no major news for the dollar or the euro or any of the pairs on the fundamental schedule. But if you visit Daily FX or FX Street, for example, FX Street, if you go to FX Street, the very first thing you will see is Euro USD tumbles below 1.1750 amid COVID concerns. COVID-related lockdowns are gripping the old continent. Uncertainty about elections also. So we know about the elections, but apparently Europe is reinforcing the lockdowns. Before it was all free and nilly, but now they're bringing back the lockdowns, and that crippled it. And then you can also see pound USD falls below 1.30 amid fears of a UK lockdown. That's another thing. If you go to Daily FX, US dollar bid on safe haven flows versus euro versus pound. Eurozone heading for lockdown. Eurozone heading for lockdown, right? And so this came out last night during London, and then obviously the dollar, being one of the oldest safe havens, surged to the upside. You can see the daily time frame. Price has jumped out of the channel, and at this morning it could go either way. We still have an election to deal with, so with all the pandemic and the lockdowns, and now we have the election, we have a lot of fundamental stuff. So we have price trying to go higher. I don't think it will, to be honest. I think we'll pull back within the channel by the end of tomorrow. But the next high is up here, 93.88. That's the next high for the dollar index, and so we may get a pullback this today back down to 93.13, and then see what happens. So we initially wanted this push up for the dollar index on Monday, Tuesday, because we started the week bullish for the dollar, but it was just getting mixed signs and even sold off a bit. So we were kind of stuck in that bias, and then European Union is looking to lock down again, so that's going to obviously help the dollar, and that's why this morning you'll see, for example, Euro USD and Aussie dollar just completely melt. So for this morning, we're going to be still bullish on the dollar. I think we will make a I think maybe back down to here, 93.13, and then if we're still bullish, then we can probably rise up. Tomorrow is a very important day, so if you look at the fundamental schedule, actually, yep, you see right here GDP for the USD, unemployment claims, and then the monetary policy for Euro. So if you look at the GDP for the dollar, 2.9% versus a negative 1.8%. That's obviously very, very good. And then obviously here, this is above the previous one. So the dollar may just launch up, but I do think we'll get a retracement before that. So if you're looking to rush into dollar longs, just be careful. Right, something like this. This probably going to be the most likely option. We do have this range right here between this high and this low that we have kind of went halfway. We already went halfway to that range. So that pullback is going to be important, and the reaction at 93.13 is going to be important. If for any reason we do drop below back to the channel, then on the higher time frame, this will just look like a fake out, and the channel will still be intact. But that pretty much our bias at the end of the week, the start of the week was correct, and then the Euro USD and pound and the UK lockdown kind of sealed the deal that the dollar will push up to the upside. We are 6 days away from the election, and I was looking at some of the scenarios of how the markets will react to if Biden or Trump wins. They're both favored to react positively. There's different benefits. So Biden will obviously lead to higher taxes for corporations, but at the same time, a tendency for less trade wars. If Trump wins, there'll be an increase in trade wars with China and the East, but corporations will be taxless. So for now, I think the dollar is shaping up for a push to the upside. If you look at today's daily candle, it's already pretty much eroded. So at one point in time, this was looking very, very bullish. And since then, it's been brought back down to reality. We have a long to the top, a fairly long one at the bottom. I still think we may have a pullback before we go up higher, because this is a pretty significant push up. And we're also forecasting bullish GDP. So put those together, we're looking at a bullish dollar to end off the week. But if we do pull back, instead of bouncing up, we bounce back into this trend line, into this descending channel. Then if you look at the higher time frame, that could just be looked at as a fake out, right? Because despite all the theatrics, we're still slowly inching lower and lower in this kind of tube. So just watch out for that. Long-term, big picture, it's still a long. We have this support here and then this blue support down here. We used both. Currently, we're resting just a bit above this support at 92.90, and so I think long-term, big picture, the dollar should recover. Obviously, we know what started this huge sell-off from up here. We all know by now what happened back in March, and so we do have a long ways to go to kind of make up for that. So maybe a new president is the catalyst for us going